Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Blake Mclaughlin, who is the Vice President of Exploration for Axcap Ventures, a North American investment firm with a focus on mining, holding some of the most prospective gold belts in the United States and Canada, combine historical drilling success with modern exploration upside. Blake has spent over a decade in the mining and metals industry and is highly experienced in taking mining companies from a development into production, from grassroots junior exploration to advanced exploration, resource development and project construction. And he's worked for a number of companies in the pre-resource to maiden resource stage. Blake is on the podcast today to give us an overview and history of Axcap, content around where to find exploration success. We're going to talk about M&A in the junior space and a lot more and other things around the junior market. I just want to give a shout out to our sponsors, Hawcroft, who are leaders in property risk management in the mining industry since 1992. They offer insurance risk surveys, construction risk reviews, and asset criticality assessments, and more. They work across 600 sites globally and support all areas of mining. So if you're looking for any property and insurance risk management services, then please visit their website at www.hawcroft.com. And all the details are in the show notes. Blake, welcome to the podcast. How you doing?
Thanks for having me, Rob. Doing well this morning.
Yeah, that's good. I'm in the UK and you're in Canada, in Toronto. We were just talking about the weather, and both weathers are not too dissimilar at the moment. So, I wonder if you can just tell us a little bit about your career, as I just mentioned, obviously briefly. Obviously, your background is in a variety of obviously exploration and taking a project through development into production. But I'm wondering if you can give the audience an overview of your career, how you got into the mining industry, up until present day.
Yeah, of course. So, technical guy by background. I'm a geologist. Have about a decade and a half experience, working predominantly in Canada on grassroots and kind of pre-development phase projects. And really my specialty is drilling and advancing projects into resource and development stage. So, it's kind of one of those ones where I started out in university down a different path and found some earth sciences classes that really, piqued my interest around learning about the world that surrounds us. And I think that's really how I tied myself into geology, realized that there's a great career path here where you can earn decent money and do something that's critical to global economies, which is really where I see the strength in the resource sector and a big part of what I love about it these days.
Yeah, and I suppose travel as well.
Yeah, travel as well, and it's a double-edged sword. When you're young and you get to be paid to jump out of helicopters and fly around in float planes, you have a lot of fun doing that, right? And then as you kind of start to look towards family and kids and things like that, the travel becomes a little bit more challenging. But I think it really reinforces the fact that you have to love doing this to really stay in this field and you find something that works, right? So I have young kids, and the travel is always a balance, but they know daddy through the iPad, certainly.
Yeah, understand. So I just wonder if you can give us a snapshot of Axcap.
Yeah, so we really see Axcap as the best value in the gold space right now, where over the last year, we've pulled together 3 quality projects in US and Canada that combined sit just under 8 million ounces total. About 6.2 of that sits in measured and indicated. It really shows the quality of the projects that we have currently. Really, that's centered around our flagship in Nevada called Converse, which is about a 6 million ounce open pit project that would be a bulk tonnage, low grade development play, which we're going to look to update some economics on this year. So really, it's value through finding unrealized opportunity in well-developed gold projects, and then also advancing them through drilling, where we really see the main value driver in the space, where the lack of capital in the junior space over the last decade is really, that's been the major thing, which is reduced drilling budgets, and we see that as critical to advancing the space.
Yeah. My understanding is that Axcap vetted over 100 100 plus projects over the last year, and only selected 3 to add to its portfolio. I just wonder if you can just share from a technical standpoint what makes each of these obviously projects compelling.
Yeah, so there's certainly a couple factors. Part of that is we're looking for projects with substantial data, advanced projects. We're not looking for one shiny rock in a big field, right? We're generally spending 10 cents on the dollar for past exploration spend, but with substantial upside left. And so, projects that have had 30, 40, $50 million spent on them in the past, all the geophysics, all the soil sampling, substantial drilling has been completed, and the projects just haven't moved through to development for a variety of reasons, but where we still see substantial opportunity left behind. Also, a big part of that is projects that are really levered to the gold price. When we started building Axcap, we took a position that gold was going to continue to perform well, and continue to move into kind of the next floor, which we've seen recently. And that's really the thesis coming together, where high torque projects that really perform well in a rising gold environment.
Do you think the current macroeconomic environment is providing the runway and flexibility needed for success? And do you think these, or I suppose, are there advantages that past explorers may not have had?
Big time. So it's part of our thesis. We want to be canned in the US only. I think recently what's been happening globally has emphasized the jurisdictional risk that can happen on projects. And so, that focus has been important to us. And then really also with what's happening in the world, geopolitical stability, what's happening with debt, and subsequent printing of money, all of these setups really make the structural setup for gold to perform well for the foreseeable future pretty strong, in my opinion.
Want to talk about your Converse project, Axcap's obviously flagship asset. It's located in the state of Nevada, which is obviously one of the top jurisdictions around the world. What geological features make Converse obviously a compelling asset?
So, we always talk about Nevada as being a super important jurisdiction, and I think if you look at it as a global producer, it would be the 5th largest country in terms of gold production. Sits in that range at least, right? And so part of that really is the infrastructure. This project has roads, power, all right onto it. It has never been developed, but it sits beside 2 mines that have produced right near 5 million ounces historically, one of which is still in active production. And so again, kind of comes to jurisdiction, location. Battle Mountain Trend has done 50 million ounces of production historically, substantial operators and mines in the area. And so as we do de-risk the project into a more advanced development stage, you can look to workforce and infrastructure and all the requirements that would be there to actually build the project with relative ease.
We've obviously seen the price of gold itching upwards recently, or even over the last few years. Do you think this upward trend will continue? And also, I suppose on the supply side, are we seeing any notable changes in supply dynamics that can impact this?
Yeah, I'm a believer in the $5,000 gold environment. I think we will continue to see it moving forward. That being said, we're going to certainly see some floors develop and some ups and downs on the way there. But as I kind of mentioned, the structural setup doesn't seem to be any better than it's ever been for gold. And then, as you mentioned, right, the the supply side is really hard to adjust short term, right? So bringing new projects online and substantially increasing the supply side in the gold environment is not a short term option. And so, it comes back to simple economics on supply and demand, right? And we've seen some projects come online, but exploration expenditures have been relatively flat for the last 10 years, and that's really had an impact on discoveries.
Yeah. You recently produced some or released some results literally the other day. I just wonder if you can tell us what those results actually mean to the company.
Yeah, of course. So we're in the middle of a 5,000 meter drill program right now at Converse in Nevada. Really, the goal of this program is to show that there's a path towards a 10 million ounce resource. So on Monday, we put out the first drill results from this hole from this program, which is the first hole, and very much in line with where we see the project going. So we came out with a low-grade polymetallic intersection within the pit shell, reinforces the resource, and certainly shows some of the potential value add that we're going to look to produce this year, where you get samples with up to 2.5% copper and 145 grams per ton silver. We're going to look to add that into the resource as we move into an economic evaluation. And then along with that, we made a new discovery at depth with some good thicknesses and grades. So 10.5 or 10.8 meters at 5.5 grams per ton, outside about 200 meters outside of the pit. And so this is really opening up the potential that we believe that exists here, where there's potential for some type of underground and open pit resource combined. Really supports the grade profile and will continue to help de-risk the asset moving forward.
We hear a lot about the lack of new discoveries. Is this a real issue, geological, financial, or is it something else?
I think it's a combination of everything. We certainly have the ability to make new discoveries, but I think if you look at assets that have come into production, we've seen grades decrease, we've seen AISC increase, and so the discoveries that we're making today aren't the same discoveries that we're making 10 or 20 years ago. We're seeing that evolve, where something like in Ontario over the last 5 years, we've seen 3 bulk tonnage open pits come online in Greenstone, Cote, and Magino, all major gold producers that are projects that would never have been built 20 years ago. 1 gram per ton mines that are doing well these days, but are the evolution of the sector, and I think we're going to continue to see that, where these really, really high grade, high margin deposits have been found, and they'll continue to be mined, but won't be the dominant portion of ounces mined globally as we kind of move into the future.
Obviously, most juniors focus on grades and obviously drill results. But when you're actually deciding where to spend your next exploration dollar, what factors do you consider that doesn't usually get discussed?
Oh, that's a good one. A lot of that, it really for us comes down to our position on gold and where we see that subsequent value. And so often when we buy these projects, lots of people have opinions on them. They're not new projects. They've been around. They've kind of come through a cycle where maybe they didn't make it, or the cycle ended too quickly for these projects to advance. And so a big part of our methodology has to be, what are we doing differently, and how are we approaching these projects differently, and why it's different this time, right? And so part of that is the gold tape and what's happening in the gold environment, and the margin expansion we've seen over the last 10 to 12 months in the gold producers. But certainly part of that is kind of the advancement in technology as well, and innovation, where we can use some more innovative approaches to look at the data that's been collected over the last 45 years, and come up with a new idea.
We mentioned earlier that you've assessed over 100 projects in a year. Is there certain criteria that you measure these projects against? And I suppose what are your three top criteria that you focus on when deciding to move forward with a project?
So to date, really a very important piece for us is transactability at a reasonable value. There's lots of people that have the same stance as us, even though their projects, companies, portfolios may not have the market value that necessarily they believe. They're not, the transaction value is not there, right? Where they're not willing to sell it for a bargain. They have opportunity to raise capital and maintain a company, and hold out for the eventual market that will benefit that asset. So that's been a big part of it for us, and typically we've been able to acquire projects for sub $4 an ounce drilled off in the ground, which we think is tremendous value these days. Upside is very important for us, so the resource can't be entirely drilled off. We want to be able to continue to show that there's growth potential. Whether that is infilling substantial low grade and levering it to the gold price or new discovery potential. But that's very important for us as well. And then kind of the third one is it really comes down to holding costs. So we can't carry a large portfolio of assets that cost a substantial amount just to carry, right? And it's part of the reason why we've stayed away from the large brownfield assets that exist around Canada and the US to date. With large reclamation bonds and carrying costs associated with them. To date, that hasn't fit our model of growth, and so that's certainly been one portion that we've stayed away from to date.
There's obviously a lot of talk around M&A at the moment. Do you think juniors should be building towards production or building to be bought? Has that shaped your business model?
It has, and I think both models have credibility. Coming out of my last role at Argonaut and Magino, I think that there is a certain level of company that should be building large scale mines. I think there's too much risk inherent in a small cap company trying to build a large capex mine. The debt burden provides so much risk to that company that it can be quite difficult. It's super rewarding if it works out, but I think there's a position for that, and it's certainly not our model. We don't look to build these assets. We look to advance them and de-risk them and prepare them for construction. But they're large-scale assets that we think are best held in mid-tier or larger producers down the road.
Retail investors often chase, obviously, the next big hit. What's something about your project and company that the market tends to undervalue or overlook?
I think the exploration upside is a big part of that. So we're underpinned by resources. Our smallest resource has 850,000 ounces defined in a compliant tech report. And so I think these are viewed as incremental growth assets, and it's not necessarily the story. There's tremendous upside to be made, and each of them has a paradigm changing exploration attribute that we will test to say, we're really changing the story on these projects. We're not looking to just drill the fringes and incrementally grow them. And I think that's the real kind of exciting catalyst that can hit at any time as we're active in these drill programs.
And lastly, what's the sort of short to medium term outlook for Axcap over the sort of next 6 or 9 to 12 months?
So, as I mentioned, we're actively drilling. We'll have drill results coming out throughout the summer from this program. Looking to update a PEA on Converse Q4 of 2025. So those would be the big main catalysts for us. We're midway through getting everything underway for a substantial marketing campaign as well. And so the combination of the exploration upside, the re-rate, revaluation that comes with buying these unknown or unfavorable projects and putting a new spin on them, combined really over the next 6 to 10 months is really where we see movement in the company. And currently we trade sub $4.50 EV per ounce right now. and we see our peers in this $40 to $50 per ounce range. And so a real upside lift potential as we continue to de-risk this asset and show the true potential here.
Yeah. Blake, really appreciate your time. Thank you for coming on, sharing your story, talking about Axcap, and providing content around obviously exploration, M&A, what to look for in terms of a project. So if our audience wants to reach out to you, if they have any questions, want to follow the Axcap story, how can they go doing that? And what social media platform channels are you on?
Yeah, we're active on LinkedIn and X, www.axcapventures.ca for our website, or info@axcapventures.ca. Will get pointed at me if you have any follow-up. So I appreciate the time, Rob, and thanks for having me on.
Yeah, no worries. And we include all those in the show notes that accompany this podcast. So all the best with the drilling during the summer at your Converse project. And maybe you might want to come on later this year or even next year, give us an update on the company, and maybe give an update on the junior exploration space, because I imagine in 6 months or so, a lot of things may have changed, and with the gold price as well.
Ever active, and certainly look forward to the next update. It was a real pleasure today.
Yeah, no worries. Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. Obviously, this podcast or this episode was more relevant to the exploration and junior space. So please share this amongst others in our industry all around the world. We need to educate, and I'm sure there's some content that Blake covered that will be educational to people that you would pass this episode on to. So thank you for listening, and until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.